Good evening, and welcome to yet another Smartkarma weekly forum. This is a time when we discuss a few compelling, actionable ideas gathered from around the Smartkarma platform. We get to meet some of our analysts, and we also take a look back and see some of the ideas that we discussed in the previous sessions and how they resonate or make sense a few weeks on. So while we're waiting for attendees to stream in, I will run through our customary 4 bullet point disclaimer. First of all, the forum is strictly for subscribers. It's purely for informational purposes. It does not constitute investment advice. It is the opinion of our insight providers and not of Smartkarma. And of course, Chatham House rules apply. So please do not share any of this information on social media or any other public forum without express permission from us. As we kick off today, let's take a sort of a very quick stock of some of the ideas that we went over in the last few weeks. So last week, we took a look at Pacific Textiles. This is a Hong Kong listed textile manufacturer with a 20 to 30 year track record that has a large and growing exposure to Vietnam that nobody has recognized. It's also a potential acquisition candidate. We looked at how a large Japanese company took a 28% stake in it at roughly double its current share price. Next, we took a look at Macau and how that might be the last Chinese recovery trade. And, you know, as luck would have it, just soon after this, just very, very soon after the forum last week, the Macau government announced that they will be opening up borders to Chinese visitors without requiring quarantine. And Macau has just broken out, and SJM has done really well in the last few days itself. We also spent some time looking at pet care, a thematic that one of our insight providers, Davey Subhakesan, had written about. And the week prior to that was quite different. We took a look at SBI Holdings, which is a hidden mega bank in Japan, and how they are building out a whole financial system using blockchain. We took a look at Alibaba, especially Alibaba versus Tencent, and the discounted value in Ant that it offers at current prices. And we also examined the next batch of Chinese IPOs. So like this, every week we are featuring 3 things at our forum. A small or mid-cap idea, a large cap, and a thematic. And while presenting these ideas, we're also showcasing the platform and making you aware of some of the key features. So today, we are looking at 3 things. First is we're going to kick off with an idea in Indonesia. We will look at a dominant consumer staples company that has a 40 to 70% market share, but is trading at a deep discount to peers. Next, we will look at a large IPO that's coming here in Singapore. That is the Thai Beer Company IPO. And in our thematic section today, we will look at Japanese department stores, how they're dying, and a very, very interesting new thing that is starting to grow in Japan. So just to kick things off, I would like to introduce you to 2 analysts who've joined us for today's forum. The first is Angus McIntosh. Angus, would you be turning on your camera today? You don't have to.
My camera should be on. Is it on?
Ah, yes, it is. Perfect.
It is, right. There you go.
Fantastic. And we also have, you're looking very handsome, Angus. and we also have Davey with us. Davey's based here in Singapore. She travels to India quite a lot as well. And Angus is in Indonesia. So we'll kick things off with the first idea, which is Ultrajaya milk and trading. This is we put it in the small mid-cap category. It's got a market cap of about $1.1 billion, which is quite decent for Indonesia. It's actually a very cheap staple, only on about mid-teens, about 14 times PE. It's a fairly consistent performer. We'll take a look at it. And we've put together just a few bullet points here. Angus, if you don't mind, you can sort of walk through some of these points, or I can sort of read them out, but they're all extracted from your insights on the platform anyway.
Yeah, well, I mean, I think those points, just glancing through, will come out in my quick kind of resume on the company. you want me to go ahead?
Yeah, please go for it.
Yeah, I mean, I think the first thing to say is that Indonesia is an extremely attractive dairy market. The levels of consumption of dairy products are extremely low. If you compare to countries around the region, Indonesia consume about 15.6 liters of milk per capita per annum, and that's versus Thailand at 37 and Malaysia at 57. So there's a huge difference in consumption. So there's a lot of upside to milk consumption. There's a push towards more healthy living. There is also a stunting problem in Indonesia for children. So that runs through not just for babies, but obviously when they start drinking dairy products and so on, that it's much better for their growth. As children. So there's a push towards more health conscious products. Ultrajaya is interesting. It has a very long track record. It was started in 1975 with Tetra Pak, as you can see on the presentation there. They have state-of-the-art production facilities based up in Bandung. So they're producing basically UHT milk. UHT milk is about 98% of the market in Indonesia, given that you don't need to refrigerate it. UHT milk has 30 days to 60 days shelf life in ambient temperatures, so it's very easy to transport around the place. Fresh milk is very small, but growing quite quickly. There are companies like Greenfields. If you ever travel to Indonesia and you go into a mini mart, all the fresh milk is under brands like Greenfields and Indo Milk. But Ultrajaya controls around 40% market share. The other two players in the market are Indomilk and Frisian Flag. They have about 15 to 20% share each. Market shares have remained relatively stable. Greenfields, funnily enough, has started to move from fresh milk into UHT milk and is doing reasonably well. And that's something I would mention as a potential risk at the end of my presentation, given that they've just seen Japfa Comfeed, its major shareholders, sold its 80% stake to TPG and North Star. So they may be trying to ramp up Greenfield as a potential big player in the market. But going back to Ultrajaya, I mean, effectively, they source their raw milk powder from mainly from Australia. So they do rely on imported skimmed and whole milk. So that's again potentially a cost issue. But those milk prices powdered milk prices remain very, very stable over the last year, despite COVID. And actually, the price of whole milk's come down, skim milk's gone up slightly. They use a blend, 40% skim milk and 60% whole milk to make their milk. They do use some fresh milk, and they do try to source as much as they can locally. Ideally, they'd like to do a 50-50 split between local sourcing and overseas. It's probably for them, it's probably about 65% sourced from imported milk powder, and the rest is sourced locally through dairy cooperatives. They're also building two big herds of dairy cattle, one in Bandung and one in Sumatra. They've obviously got to be quite high. They've got to be at 1,500 meters above sea level for the right temperature, etc., for dairy cattle. But they're building their own herds, which seems to be going pretty well. And they're actually sourcing from companies like Greenfields, who have excess supply of fresh milk. The company's achieved, very sort of strong long-term track record of growth. Growing at sort of around 10% per annum. They tend to put up prices every year. Obviously, last year was an exception, but even last year they managed to achieve a relatively stable performance. They did a lot of cost saving, and despite the fact that they saw quite a big downturn in some of their smaller packet milks. And the other part of their business, which is about 30% of sales, is from packet teas. And they have a 70% market share in Taste Sosro brand, through Taste Sosro brand of packaged teas. So they are a sort of quite a well-rounded staple. So it's the UHT milk and it's the packaged teas. And they've had very strong market share in both. the company is very badly covered. You don't have it doesn't have any broker coverage, and I think part of that is because it's based up in Bandung, so people find it difficult to go visit the management. But I found the investor relations chap is a Dutch chap who's very, very forthcoming, and very straightforward. They have very good governance, I think. It's a family-owned company, family-run. This is really their only business apart from an ice cream brand, which is separately listed, called Campina. It's kind of a well-focused company. And having partners with Tetra Pak, it's state-of-the-art production. Combi Block as well is one of their production partners. So the quality of the product and the production and everything else is very, very high. They've got various ISO standards, for production, for the environment. They don't have a sustainability report, but that's something which they're producing this year. But I don't see any reason why they shouldn't come out scoring quite high on that. And they're quite, they're focused on areas, in the ESG space, like utilizing their waste products in producing, biogas and fertilizers and that sort of thing. But yes, I mean, as Raj says, and the valuation is very attractive relative to comparables. Actually, it's a supplier to Unilever. They do Boa Vita fruit juices for Unilever. So that's the kind of quality side of it. They do some toll producing for other players as well. So yeah, I mean, it's undervalued and I think a very interesting story.
Thanks, Angus. That's perfect. The pitches on the forum are 5 to 10 minutes. It's open mic, rapid fire, sort of just to the point. So this is perfect. Like for me specifically, when I started reading your work on Ultrajaya on the platform, I was very surprised by the market share that they have. I mean, I've seldom come across a company that has this kind of market share. I mean, 40% in UHT milk, as you mentioned, but also 70% of RTD carton drinks, unheard of. And that sort of oligopolistic competitive landscape, and the fact that these guys raise prices sort of very consistently over time, those are all very sort of unique attributes, and also finding such high level of automation all the way in Bandung, and this is already at a very, very decent scale. And as you said, Indonesia in itself is a giant laggard in terms of consumption, and there's a long addressable sort of a roadmap here. So that's great. I think before we move on to the next idea, I just want to quickly change screens and show people, the attendees today, really, some of the work that you've got on the platform. And you'll notice as you open up insights, there's an insight stream. So you can see how Angus has very consistently been writing updates and meeting management and so on. For example, in December, I think you caught up with management, you met the investor relations team and you reported back. So I find that very, very helpful. The other thing I did after I read the idea, I looked at the track record of the company. So I just went into financials here and saw what they've done over the last 10 years. And I mean, that is a picture of stability and growth and consistency, right? That's revenue growth. The pink bars are the profit growth and margin expansion. I mean, that's what you're looking for in a consistent consumer staple company. And of course, free cash flows have continued to expand as well. So definitely an interesting name. Angus, one thing I will highlight here today, as you mentioned, this company uses skim milk powder and raw milk, whole milk powder. And, the prices of those inputs have actually gone up significantly. And we're seeing that in a lot of commodities, no surprises. This is whole milk prices also touching 5-year highs. So it might lead to a little bit of margin contraction. Having said that, I was doing a little bit of back testing. In 2016, when we saw prices at similar levels, they were able to show pretty decent margins. So if I go back into analytics and look at what happened to their margins back in 2016, it actually wasn't that bad. It wasn't really that bad. They were able to pass on some of that. But that is definitely a risk, and that might even create a nice buying opportunity for investors. So this could be a pretty decent buy and hold story once you time it to the right compression levels as well. Angus, thank you for joining us. I had promised 10 minutes. You've actually given 15, so I better let you run. Thank you, sir.
No problem. Thank you very much.
Bye, Angus. Thank you. Cool. That was Angus just briefly taking us through Ultrajaya milk. Next, I'm super excited. I've got Devi with us today. Devi also focuses on consumer companies, and she's done some excellent work recently on Thai beverage and its upcoming beer company IPO. So we thought it'd be really nice to get a 5-10 minute lowdown from Devi on this. Devi, I just put a few key points down here. This is really just a scribble sheet. It's not meant to be very formal, but I thought maybe I can ask you a few questions, and that's how we can chat about this. So first of all, before we look at the IPO, Thai Bev itself is already listed. It's been listed in Singapore for a long time. Could you just very briefly tell us, what is the makeup of the company? What do they sell?
Raghav, Thai beverage is a very well-known stock. Everyone knows the stock inside out. So right now the call is mostly on valuation, of Beerco, and your conviction about whether the IPO will go through and at what valuation. I don't think there is nothing much new about the company. The past 1 year, what we have seen is.
But Debbie, sorry, I'm gonna sort of one sec. Not all the attendees on the forum today know Thai Bev the way you do,
Okay.
Yeah. So if you don't mind, just a real one-on-one, what are the 2-3 key business areas?
Yeah, let's look at the sum of the parts valuation. If you look at the core business, it's a spirits company, and they have dominant market share. They do very well. They have a wide array of spirits brands across, mainly selling in Thailand and in the region. Beer is something they have built up in Thailand, but mostly acquired. The bigger part is what they acquired in Vietnam, which is a listed company they're called Sabeco. So in 2017, they acquired Sabeco, 53% of Sabeco, at what was quite, I would say, steep valuations. So that's when the whole debt issue started. The company, it's a conglomerate, so you can see food business as in Oishi Group is a listed entity which is into packaged food. You have non-alcoholic beverages in Fraser and Neave, which is branded, sugar drinks, which is not a sexy business anymore. Fraser Property, where they have a stake, is mostly property business, again not in great shape right now. Sarmasuk, you have some restaurants, you have other business in that, even that's not a big part of their core operations. So it's basically food and non-beverage comes in the other listed investments. If you look at Thai beverage, they have KFC, a chain in Thailand. They have entered into coffee business. They have numerous small businesses. So it's a conglomerate in the food and beverage segment. But if you look at the earnings profile, it's called a spirits company. Now, the entire discussion about the company has come about because of the Beerco IPO, which is expected to happen. Yeah. Now, there's a little bit of, I would say, miscommunication or misreporting, or I don't know if it is planted news in the media, where they initially talked about a $10 billion valuation for Beerco, which is when I wrote my first report on Beerco valuation, saying it is very difficult to justify a $10 billion USD valuation based on what was reported numbers till then. The company has now come about, announced their 4Q numbers, which normally they don't, to clarify, saying that, okay, our beer business is looking up. It's not as bad as what was reported in their September results. So the numbers look better than what was announced earlier. Even then, I find it difficult to justify a $10 billion valuation. My stretch valuations would be 8.5 to 10 billion Sing dollar valuation, assuming a 30 to 35 times PE. So bear in mind, Budweiser APAC, which is a premium Asia-based beer company, trades above 40 times PE. They have margins.
So Devi, if you would, so as you mentioned, Thai Bev is spirits, beer, and a few other small investments.
Yes.
And now they are taking this beer asset and they want to list it separately, right? That's the Thai Bev vehicle. Yes. And can you explain to us, before we get to the valuation, can you explain to us what do you think is the main motivation to do the spin-off?
Oh, they need to raise money to pay off their debt. Now, if you look at outstanding debt, they have next.
It's this chart here, right?
They have, yes. Within 1 year, they have to pay down $2 billion. So they really need the money. So if they sell down 20% of Beerco, they'll probably just about get 75% of that money needed for this year's pay down. Plus the cash flow, I'm sure they can manage.
Understood. Got it. That makes a lot of sense. So in a way, this is a much needed listing in order to raise funds to pay down the debt that the company has on its balance sheet, right?
Yes.
Okay.
So the company also gives the rationale of unlocking of shareholder value, which maybe, at least people will have, investors will have better visibility about what is Beerco valuation. Right now, as an analyst assume.
And I think you clearly explained why now, because they've got money coming up, they owe money that's coming up shortly. So hence, that's why the timing is now. Can I ask you a question about, the listing itself? So ThaiBev is currently listed in Singapore. Yes. And the beer company will also be listed in Singapore, right?
Yes, that's public, the media reports.
Yeah, so soon you will have, in effect, 2 ThaiBev listings. And one will be a holding company that owns the other. Now, recently, in the recent past, we had discussed an idea on the forum, which was Wilma, where they had done a listing in China, and I guess there was a different angle at play. It wasn't so much about paying down debt as much recognizing the value of this business on the Chinese market, which was trading at much higher valuations. So just to clarify and confirm with you, Devi, there's no such angle. There is no valuation arbitrage or a higher multiple that they can achieve by listing in a different market. It's the same market listing.
See, 53% of Sabeco accounts for little more than half of Beerco's profits.
Mm-hmm.
So, and Sabeco listing in Vietnam trades at a lower valuation. So some of the parts, if I were to assign Sabeco valuation based on the listed price of Sabeco and 53% here, it would look much lower. Most analysts weren't doing that because they paid much more than that for, So Sabeco right now, I think is trading at around $5 billion USD for the entire company. So
understand.
The assumption is they probably will get a better valuation by clubbing Thai assets, which otherwise would get lower multiples because Thailand is not a growth market as Vietnam. Vietnam is a high growth market, but low margin market.
Got it.
I think they expect to get some valuation closer to Budweiser, but I don't think that's fair. It should be at a discount to Budweiser for sure. But still, I think there is an upside probably coming in valuation terms.
Understood. And Devi, I think the other thing that's quite interesting here, and you just mentioned it, but I'll clarify. So there is ThaiBev, which will own a stake in ThaiBev Beer, and ThaiBev Beer in turn owns a stake in Sabeco, and Sabeco itself is listed in Vietnam as well. So actually, it's a holding company on a holding company, which sometimes leads to a double discount. And it's not that straightforward. Let's put it that way. Straightforward. Yeah. So it's not that clean and it's not that efficient a capital structure, but clearly the need here is potentially to pay down this debt and hence.
Probably, Raghav, you can throw some light on it. I mean, I don't know how easy it's for investors to buy Sabeco. Like if I want to play Vietnam beer or even Vietnam consumption, can I buy Sabeco? And is it fungible? It's like, can I trade in, sell in one and buy in the other? I doubt probably a lot of international investors may find it difficult to invest directly in Sabeco, and maybe Beerco will give them a better vehicle to, play this emerging Asia beer. I'm not clear about that part, but I think that also will come to play.
I think you're right. I think it's a question mark because actually emerging market fund managers are already overweight Vietnam. So that means they buy a Vietnam. Of course, if I'm a retail investor or, I'm not set up to trade Vietnam easily, then yes, this becomes an easier exposure. But again, it remains to be seen. But clearly there is already an existing way to play the Vietnamese asset, which is through the Vietnam listing. Got it. Now, just my last question, which is, you've got a valuation table here where it says that Thai Bev, sum of the parts, is around 95 cents. And I think today Thai Bev is trading around 75 cents, roughly, give or take.
Yes.
Can I just ask you, is 95 cents a base case, a bull case, a bear case? Where do you put that?
So it depends on your conviction on Beerco, IPO, and Beerco valuation, the IPO valuation. To my mind, what I have assumed here is not steep valuations. I would think they would probably go for an IPO at around 8 billion plus Sing dollar, and I have assumed a 20% discount. But investors may not want a 17 times EV to EBITDA, which I have, if you want to take a valuation that spirits business is not what many investors can invest today, given all the ESG issues involved in it. Some of them don't. It has been a resilient business. It has done quite well last year. So, that is a number you may want to play around with, but still the current valuations assume, what's trading right now assumes neither an upside from IPO nor an upside from, it assumes like a 13 times EV to EBITDA on spirits business, which is where Asahi trades at. It's a Japanese player. Thai currency has been strong.
Got it. Got it.
Bullish. Yeah. So,
David, I think we can read between the lines, and it's sort of quite clear what you're saying. One thing I will highlight is, some of this type of analysis is genuine value that we bring to a lot of investors, where oftentimes you can spend a lot of your effort reading what the press is writing or what bankers are saying, and that may or may not be a very accurate representation of what is actually happening in the market. Now, Devi runs an independent research firm. She used to be a very senior buy-side analyst. She has spent many, many years looking at these companies and can provide a much more, I guess, objective viewpoint. And we really value that other perspective. Devi, thank you so much for your time. This was really helpful. Before you go, I'll just quickly show attendees some of your work on the platform. Again, this is your latest piece where you wrote just after the results that had been announced, and you have previously written other pieces as well, talking about the valuation and so forth. So again, attendees, you can read up on Thai Bev on the platform, and you can zoom into the work that Devi has done there, along with the other analysts who have also contributed here. Thanks so much, Devi. You can hang around for the last segment, or you can go. It's totally your choice. So thank you. Thanks so much. Okay. Now, just one thing, you can ask questions at any point of time for the attendees. I have already received one question, which was actually sort of, I think, 7 minutes into the forum. It had nothing to do with Ultrajaya or Thai Bev. It was a question, a more general question. It was a very valid question. It said, in the light of rising treasury yields and Hong Kong Exchange also announcing a rise in tax on equity trades, how would this affect the ideas that were previously discussed? I think it's a great question. And I think there are two answers to it. Let me maybe give you a quick look. So, on the 4th of Feb, we were talking about inflation. We've been talking about inflation and higher rates for a very long time on this forum now. In the weeks prior to that, we were talking about why banks are a better place to position. The week prior to that, we were giving a warning for 2021, which was largely around higher GDP growth resulting in higher inflation, which is going to drive a tighter monetary policy. So that's been a consistent theme throughout a lot of our discussions pretty much since December. A lot of what we are doing here is trying to figure out how to find a very good balance between opportunities that are long-term, opportunities that have near-term catalysts, and also how they fit into the macro picture. Also, the ideas that are shortlisted and presented here are derived based on data on the platform, popularity amongst our users, and a few other metrics that we use to bring out what's most actionable. So hopefully, that gives an answer to you. Also, in case you've missed some of the prior forums and you want to view the recordings or look at the slides, you can always reach out to us on the platform. We're more than happy to share those with you. Okay, With that in mind, let me quickly proceed to the last segment for today. This is about Japanese department stores. So, something very interesting happened in Japan over 2020. Of course, we all know that retail sales took a hit everywhere globally. But in Japan, the impact was just way too big. In Japan, sales fell so much that sales through department stores went all the way back to the levels they were in 1975. That's just how bad the situation got. And the decline has been happening for several years now, and it really accelerated. So, department stores are really dying, and the bigger cities, the top 10 cities are actually faring a lot worse than the suburban or the regional cities, right? In terms of categories, so apparel was down 30%, food was a little bit more resilient, just down 15%, but cosmetics was down the most, about 39%. So, one of the things I was doing personally, I was trying to find good cosmetic stocks that will recover once the reopening happens, right? And a lot of these stocks have already started to do quite well, but they will continue to continue to recover. Now, the department store decline is actually very, very structural. And I think that creates a lot of new opportunity. And hence, we wanted to highlight some new players that are coming in with completely new models. Some of these models are only sort of found in Japan at the moment, and we thought it'll be nice to share these with you. So a very big new thing in Japan is what's called meal kit subscriptions. So what these are effectively is you go to a website or an app, you take on a subscription to get a certain type of food delivered to you in the form of a meal kit. And you can cook it yourself, or it could be pre-cooked. But it's largely very, very fresh ingredients that you can then prepare at home yourself. Now, some of you, if you look at US stocks, you might be familiar with a company called Blue Apron. They did something a little bit like this. But in Japan, I think there's a company called Oasis Radaichi 3182 JP. This is the company that's now leading. This is really the fastest growing, most dominant online food sales company in Japan. It was founded by Kohei Takashima-san. He is ex-McKinsey, so he was a consultant. He saw this opportunity. In 2018, only 2% of all food sales in Japan were online. And by 2025, which is not that far away now, the projections are that about 15% of retail sales are going to be online. So there's a huge growth that's happening. There's a big transition that's happening, and OE6 is the leader there. What's pretty insane about OE6, I'll quickly flick and show you this. OE6 is a spectacularly small company still. It's only $1 billion market cap. For a company that's the leading Japanese online food selling company, a $1 billion market cap is very, very small. And that's what drew our attention here. In fact, they've recently tied up with NTT Docomo, which is the largest telco operator in Japan. And through Docomo, they're being able to market to Docomo's customers. Also, Kohei-san recently bought out Radish Boya, which was the number 2 player in the market, and actually the only other player in the market. So they've acquired Radish Boya as well. And that's where the RA in the name, the RA in the name, comes from their acquisition of Radish Boya. So there is literally no competitor. They're the only game in town, and they're growing really fast. In fact, it's so tough for other players that even Walmart sold out of its food business. They sold it to KKR and Rakuten. So this is just how interesting the landscape is. It was a very undiscovered stock till last year, but in May 2020, it got promoted to the first section of the Tokyo Stock Exchange, and that brought a lot of visibility to the company also. Recently, they've also done something else that I find really interesting. They acquired a company called Tokushimaru, and Tokushimaru runs a very interesting business. Tokushimaru focuses on the senior citizens in Japan who might not be able to use a website or an app to order food, right? Or get these meal kit subscriptions going. So what they do is they convert these vans or even containers into mobile grocery stores. And they then invite anyone with a pickup truck to come and franchise out that store, drive it around for a day and earn a bit of commission. So it's creating a lot of local entrepreneurs, jobs, but it's also, bringing fresh food to the doorsteps of the real elderly in Japan. And one thing we all know, we know that Japan is a rapidly aging population and catering to that is important. So when you look at OSX now, they're very heavily focused on the online food sale opportunity but they're also catering to what they call the food refugees, these senior citizens who just find it very, very hard to even walk to a convenience store to buy food. It's growing fast. It's got a very cheap valuation. And guess what? The company is so bullish on its prospects that it undertook a 4.5 billion yen buyback in January, which is about 5% of its stock. So we like seeing that from corporates. Just a few quick slides on the growth and the valuation. So we pulled out their financials going back 2012. So if you look at their sales, their revenue has grown about 8-fold since 2012. When you look at their EBITDA, the EBITDA has grown 12x. But the most interesting thing is that if you look at their net margin, it's a very, very tiny net margin company, 1, 2, 3% net margin. But this year, for example, when revenue is growing about 30, 40%, margins can triple. So this is a business with very good operating leverage, right? Once they get scale, these margins are just going to go vertical, and you will get huge profit growth and hence market cap growth. Also, if you look at the last reported numbers, this was in January. We are seeing an acceleration. It's partly driven by COVID, but also partly driven by the scale that they have. Their sales, sorry, there's a bit of a typo here. Their sales were up 43%, profits were up 280%, net income was up 460% year on year. So these are spectacular numbers. They also have extremely interesting shareholders. Lawson, which is a large, owns 7%. Recruit, which is a recruitment company, owns 7%. Find it fascinating. Even Docomo, which I was mentioning is a leading telco, they own 1 million shares here. So they've got large institutional holders, but then they've also got a very nice free float. And because of that reason, if you look at average daily trading value, they trade $13 million a day. So this is a very liquid stock, even though it's $1 billion market cap. We were just looking at Ultrajaya, that's got a smaller market cap, but it's got nowhere near this kind of liquidity. So, that's good too. And that will ensure that people look at it. Lastly, I want to show you something else before we end. So these are the 3 brands they own: OSX, Daiichi, and Radish Boya, right? These are all meal kit companies. Just look at their subscribers. This is not like Amazon or Shopee where or Redmart where you're buying an order and then you may or may not buy next week. This is a subscription business. It's recurring revenue. So OSX has about 285,000 subscribers, Daiichi 45, and Radish Boya 61. So we're close to 400,000 subscribers in Japan. And if you look closely, an OSX customer on average pays them 13,000 yen. That's the average revenue per user. But Daiichi and Radish Boya have much higher ARPU, 24,000 and 21,000. So there's a lot of pricing upside here potentially. And these frequencies of ordering have been going up as well. So, it's really nice to see that this company has just so many drivers of growth. Now, valuation. I promised you I'm going to show you something awesome about this. So if I look at its, let's go to valuations. This company is trading below 1x price to sales. So this means that it makes more than its current market cap in revenue every year. So that is amazing. That's quite cheap for a high growth stock. I think the problem is that in Japan, a lot of investors are still valuing this company on a PE multiple. And as I mentioned, its net margin is still very small. And if you value it on PE, of course, it's going to look expensive. But then, should you value growth stocks on PE or on sales growth? I would argue the latter. That's how tech investors in the US and even in Hong Kong look at high growth companies, online models, and so on. So if people start giving it an online company's multiple, which it should deserve, this thing can be a 10, 15 times sales company. So we're just going to leave you with this idea to dwell on. This is very, very interesting. It's very new, and there is a lot of coverage on this on the platform as well. So hopefully you can refer to it. And our Japanese analysts are very diligent. They keep meeting the company and bringing out updates, so you will get that as well. I did see another question pop into the Q&A tab while I was speaking. It was on the Indonesian stock market, and Angus actually answered it. But if you have any other final questions, now's the time. If not, then we'll let you run along, and we will meet next Thursday for another round of the forum. Okay, fantastic. Devi, I think you're still on, so thank you so much for joining us today. And thank you for explaining ThaiBev to us. And we look forward to having you on subsequent forums too. Thanks very much, attendees. Speak soon. Bye-bye.